Friday, March 9th, 2018, Monaco 64, home of alternative economics and contrarian views. So cryptocurrencies are still correcting quite a bit this morning. Bitcoin is trading at a 8,000 handle after almost touching 12,000 maybe a week or so ago. I'm not too sure exactly. So is that it? Is that the end of the blockchain, cryptocurrencies? I don't think so. And there is, of course, a lot of talk about the SEC regulatory, framework that the powers that be are going to crack down on cryptocurrencies. I'm not too sure about that. Having looked at what it's about over the last few years, I think it's very difficult to regulate, how can I say, a computer program or what people are doing technologically. So a little bit like last year, a lot of stuff was coming out of China. You have headlines, Bitcoin would drop, everyone would say, oh, it's finished, and then it would rebound. And I know we've had a big correction since December. And I've said before in other videos that after such a big correction, it would take time for the market to consolidate and to correct and to eventually rebound and make new highs. And that's exactly what's happening. I'm not concerned. Longer term, I think it's here to stay. The blockchain, cryptocurrencies, and the technology. I still, of course, believe in gold as the ultimate store of wealth. Some people think that I'm encouraging people to buy gold to get rich. Not at all. Gold protects your accumulated wealth. Fiat money doesn't. You put fiat money gets destroyed over time by the powers that be, by the central bankers, by governments that work in collusion with the central banks in this, you can say, fascist system, really. It's a monopoly system. It's not a free market system. So I'd rather have creative destruction, free markets, than what we have now. The SEC doesn't regulate anything. The SEC was asleep at the switch in all the other crises. So should we really listen to them? Are they really looking after our, how can I say, interest? Is the CFTC as well looking after our interest? No. If the SEC, the CFTC were looking after the interests of investors in the US, because I'm not in the US, so I don't really care what the SEC or the CFTC have to say. But if they were looking after the interest of investors in the US and elsewhere, where are they now in terms of all the manipulation that goes on in the gold market? Why haven't they investigated the Bank for International Settlements? Why didn't they jail, push for the Department of Justice to prosecute bankers after the '08 crisis? Why didn't they go after the rating agencies in the US that rated paper that was junk, like subprime loans that were junk, AAA? Why didn't anyone go to jail? So I'm sorry. There are a lot of people, I think, in the cryptocurrency world, blockchain world, that are worried about the SEC. I'm not giving people advice here, but I'm just saying, just keep doing what you're doing. I think people who want to speculate, they should be old enough and responsible enough to do their homework. They don't need the SEC to tell them what to do. That's not me, though, advising anyone in the US to invest in this. That's just my opinion. So it's 8:15 a.m. in London this morning. Today is a big day in terms of the non-farm payroll jobs data in the US. That comes out at 1:30 London or 8:30 a.m. New York. Do I believe in those numbers? Of course I don't, but they move the traditional markets. And what I've noticed recently is that we're still consolidating. We haven't, and by consolidating I mean market's trying to decide where to go next. We've got the 10-year yield stuck between around 280 and 290. This morning, we're back around 290. It's at 287. The recent high is 295, and 3.04% is the key level. And I think things would get ugly for the financial markets if we get to 3%. That's why this number might be important, not only to see how many jobs were created non-farm payroll, but the other sub data like average hourly earnings, average working week, average, the wage numbers from that data set. Do I think that wages, higher wages produce, result in inflation? No, that's another fallacy from the mainstream economists and, the mainstream media, financial media, that higher wages create inflation. What creates inflation are the central banks and the banks that they're agent banks that create money out of thin air. I mean, can you imagine if you had your own printing press at home and you printed $1 million and went down to the mall and started buying, all this stuff? The people, the shop owners, the shopkeepers, they would probably have to raise the prices because, they want other people to buy it. So it's always a monetary phenomenon, inflation. Why don't they talk about how higher CEO pay or trader pay or banker pay in the city of London or Wall Street? Why don't they say that those bonuses and their higher salaries create inflation? I don't understand that, and it's just kind of another scapegoat strategy from the central bankers and the financial system is to blame, the public for inflation, while they're the ones who create it, and politicians, and then politicians buy into that, of course. So what are we doing in terms of prices this morning? I know I made a video a couple of days ago saying that gold could break out. And it still can. We're forming like a pennant or a flag formation. It looks like you can, draw both. And we're still consolidating. And I said it could take a few more days, even a week or a little more, for this the flag or the pennant to take, to form. And if it breaks out on the upside, then we could see, a big run in the next 6 to 8 weeks. So I'm talking more about, end of May, beginning of June, we could have broken out in gold. I'm not talking about it now. And does it mean that I'm in gold to make a quick buck? No, I'm just interested in the markets and see what they're doing. I'm not going to sell my gold if it goes up $100. I'm still going to keep it, but it's just, other people might want to speculate. And I used to speculate, but I think sometimes it's a zero-sum game. And if you are going to do it, you need to do it as a business, 24 hours. But I guess one strategy would be to play the banksters game and go into the COMEX and buy some calls on the upside. Buy the 1,400, 1,500 call spread or something like that for, going in 3 months. That's what I used to advise clients to do, a lot of options. Right now, I would say that I haven't looked at the gold options on COMEX. They must be very cheap, because gold's volatility isn't really there at the moment. So yeah, that's what I would do. That's what I would advise clients. I'd show them the formation, the flag formation, a possible target, and say, why don't you buy, the 1,400, 1,500 call spread expiring in August or something like that, Or why don't you buy the 1375, 1425, 1x2 call spread, things like that. So, yeah, this morning, though, so let's get back to the markets. Gold is at 1318.50, down 3.5. The range has been 1316, 1324. We're still consolidating. Silver is down 2 cents at 16.45. So fairly quiet markets. I think what is moving today that is keeping precious metals a little lower overnight is the dollar against the yen. The dollar yen is up 0.5% at 106.71, has been as high as 106.95. The Dow is down 7 points, S&P unchanged, so really quiet. The Nasdaq up 6. The pound is 138.25, up 13 pips. And the euro as well is unchanged. Yesterday, the dollar did quite well. The pound and the euro dropped quite a bit. Actually, gold did quite well versus the pound and the euro. It outperformed those two. And I know a lot of people are frustrated about the move, in gold, in euro and sterling terms. It feels like when those currencies strengthen, that gold goes down, and that when they weaken, when they strengthen, gold goes up, but not that much, sorry. And then when they weaken, that gold weakens as well. So they see no hope. And I can understand that, because I remember when I first started buying gold in 2002, 2003 in pounds, it was around 220 pounds an ounce. And I remember for the next 2 to 3 years, 2004, 3, 4, 5, it was really frustrating. And we had the same kind of moves. It felt like when gold was going to move up, it wasn't going to make any difference when it was going to move up in dollars, because the pound would strengthen a lot against the dollar. And that's what happened for those 2 to 3 years. But after 2005, that all changed, and gold eventually, traded to almost 1,200 pounds in 2011. So that's what I'm saying. These are all fiat currencies. Don't forget, they will all devalue against gold. Right now, it is frustrating, but as I said before, gold is just a protection, and it protects your wealth. If you want to speculate, you do. The reason I like talking about the markets is that this is what I've done for all my life. My professional life is follow the markets. Yeah, I'm a bit price conscious, but I think a lot of you like to, hear what I have to say in terms of technicals. So yeah, it will be a big day, I think, in terms of market move. We'll probably see quite a bit of volatility right after 8:30 New York time. Those algorithmic machines will be hard at work dissecting the non-farm payroll data. And before I leave, though, I want to talk about just a book here that I bought years ago, I think 2003. It's called Gold Wars, The Battle Against Sound Money as Seen from a Swiss Perspective by Ferdinand Lips. So I think this book was published in the late 90s, early 2000s. And Ferdinand Lips was a banker. He's passed on, but he even worked for the Rothschild Bank in Switzerland, and he talks a lot about the manipulation of the gold market by the bankers. So to all of those who say there's no manipulation, this is coming from the horse's mouth. Of course, So there's the appendix here of this book, and he's got some comments from, and he calls it the wisdom of, and he mentions James Dines, analyst, investment advisor, and author, in his book, The Invisible Crash. And this is what James Dines said about gold. It is an interesting historical footnote that the private ownership of gold was banned by Lenin Hitler, Mussolini, Mao Zedong, and Franklin Delano Roosevelt. I know gold is not banned anymore, but it's very much discouraged. It's treated as a commodity. It's denigrated by the financial press and the powers that be. So, you know, they lifted the ban in 1975, but they sure try to keep people from owning it. The other comment James Dines made is, President Kennedy and Johnson said gold was not necessary for backing the U.S. currency and should be demonetized because they understood that gold is a brake on the printing press. Yeah. And then words of the wisdom of Lenin, Soviet revolutionary, collectivist, and statesman, is said to have declared, when we conquer on a world scale, I think we shall use gold for the purpose of building public lavatories in the streets. Much more insightful is the following statement from Lenin. The best way to destroy the capitalist system was not to debauch the currency the best way to destroy the capitalist system was to debauch the currency or debase the currency. By a continual process of inflation, governments can confiscate secretly and unobserved an important part of the wealth of their citizens. By this method, they not only confiscate, but they confiscate arbitrarily. And while the process impoverishes many, it actually enriches some. Wow, he couldn't have said it better. I mean, and that's why they lie about the CPI numbers, the inflation, because and that's what fiat money does. It's an instrument of confiscation. Are there any more words of wisdom? Oh yeah, John Exter, former U.S. banker and monetary expert on bonds in a fiat money non-system. John Exter said, bonds are certificates of guaranteed confiscation practiced on innocent citizens living on fixed income. Wow, you know, even today it's the same. You know, you can't really make a proper income if you buy a U.S. Treasury bond, can you? With the cost of living and the low interest rates that you get, and the debasement of the currency. So let's see. Oh, another one, Paul Volcker, who's considered like a hard money man, a great central banker. And it goes on to say here, at a White House cocktail party, Paul Volcker, then Undersecretary of the Treasury for Monetary Affairs, asked the president of a major U.S. company, and I quote, "What would be the public reaction to a devaluation of the dollar?" said the executive. And Paul Volcker answered, "I don't know anyone who gives a damn." So that's how much Paul Volcker thought about sound money. So if you enjoyed this video, please like, share it far and wide. You know, follow me on Facebook, on Steemit, on Twitter, and make sure you subscribe to my YouTube channel. And I'll talk to you later. Take care. Bye.